Hello and welcome back to Go Fund Yourself. Today we're going to have a look at what are shares. Stock, shares and equity is the terms used to describe the ownership share in a company. People that hold shares also are known as shareholders. Shareholders also have a right to part of the company's earnings if the company decides to pay dividends. In some cases, shareholders also has the voting power in the company. There are some technical differences between the share and equity. Equity means that somebody has the ownership rights in the company. Usually, in the majority of the cases, equity is not allowed to be freely traded in the market, while shares or stock describes a single unit of ownership. Shares are pieces of capital freely tradable in the stock market. The holding of shares determine the proportion of equity held by any individual, directly or indirectly. The power of shareholders' vote and the amount of dividends they receive is always determined by the amount of shares they own, as well as how many shares the company has released into the market. For example, if the company has 1,000,000 shares in the market and I own 50,000 of those shares, I have a 5% stake in the company. So how much is the share worth? You might ask. But, well, that depends. There are two different values that are in play here. Firstly, it's a fair value, and secondly, market value. The fair value is the intrinsic value of the stock that is based on a company's fundamentals, while the market value is the amount people are willing to pay for the share currently in the market. Majority of the time, the fair value is much lower than the market value because market value is driven by demand, and demand doesn't reflect the company's fundamentals. The two ways to make money from shares is capital growth and dividend income. Capital growth goal is to sell the shares for higher value than you bought them. The market price for shares always fluctuates due to supply and demand. If the demand for the share increases and supply stays the same, the price of the stock will increase because people are willing to pay more for a share of the company. Another thing that drives the stock price up is the attractiveness of the company as well as its performance. Companies that meet their quarterly earning targets usually increase in value. The second way to grow your investment is through dividend income. Receive regular payments from the company as a dividend. Dividends are your share of profit from the company. Thank you for watching, and I hope you learned something new today. I hope you're gonna have a lovely day.